Hey everyone, I'm Carlos. Welcome to your January 2026 real estate market update. We're kicking off the new year, and today I want to walk you through what happened in the housing market last year, what experts expect in 2026, and what all this means if you're thinking about buying or selling a home. Let's break it all down in a simple real world way. Let's start with mortgage rates. In 2025, rates trended downward overall. We started the year around 7% and ended closer to the low 6% range. That drop made a real difference for buyers, and it helped bring more people back into the market toward the end of the year. Prices didn't rise the same way everywhere. Some areas still saw solid appreciation, others cooled off or even saw slight declines. The key takeaway here is simple. Real estate is local. National trends matter, but your local market matters more. Through third quarter 2025, prices were up in Virginia by 3.7%, while lower in Florida, Colorado, and a few other states. One of the biggest changes last year was inventory. More homes came on the market throughout 2025, and by November, active listings were up over 12% compared to the year before. That's important because more inventory gives buyers options and brings balance back to the market. You can see on the graph how the 2025 inventory curve is higher than 2024, 2023, 2022, 2021, and 2020 and getting close to pre-pandemic years of 2019, 2018, 2017. This sets the tone for 2026. Experts are describing this year as steadier and stronger. Not a boom, not a crash, but a healthier, more sustainable market. Realtor.com says the housing market in 2026 will be steady, but not off to the races. That means fewer extremes, less chaos, more predictability for both buyers and sellers. Affordability is expected to improve this year, though modestly. Why? Slightly lower interest rates, slower price growth, a more balanced market. It is not a dramatic shift, but it's moving in the right direction. Affordability really comes down to three things: mortgage rates, home prices, wages. When rates stabilize, prices grow more slowly, and incomes rise, affordability improves. And that's exactly what experts are forecasting. According to the National Association of Realtors, mortgage rates should be a little better in 2026. Not a huge drop, but enough to help more people comfortably afford a home. Most major forecasts show rates staying in the low 6% range this year. They may bounce around a bit, but the expectation is stability, not spikes. The average mortgage rate in 2026 is expected to be lower than the overall average in 2025. That matters because even small rate improvements can significantly impact monthly payments. Redfin says buyers should finally start getting some relief in 2026. That relief comes as income grows faster than home prices, which helps restore buying power. Most experts expect moderate home price growth this year. On average, forecasts point to around 1 to 2% appreciation nationally. That's healthy growth, not runaway inflation. Some markets, especially in the Midwest and Northeast, are expected to see stronger price growth. Other areas, particularly parts of the South and West, may stay flat or soften slightly. Again, local conditions matter. Even though prices may rise modestly, affordability can still improve. That's because wages are expected to rise faster than prices, which helps offset costs. Realtor.com projects that the typical mortgage payment will drop below 30% of median income for the first time since 2022. That's a big psychological and financial threshold for many buyers. This chart shows wages growing faster than home prices heading into 2026. That's one of the strongest affordability signals we have seen in years. After a tough period for buyers, sellers, and renters, economists expect 2026 to be a step toward a healthier housing market. Not perfect, but healthier. Inventory is expected to continue rising in 2026. Life changes, downsizing, and new construction all are contributing to more homes coming to market. Experts expect inventory to grow by roughly 9 to 11% this year. That's good news for buyers and a reminder for sellers that pricing and preparation matter. Builders are expected to slow new construction slightly. They are adjusting to demand, but even with new homes being built, we're still undersupplied overall. This long-term chart shows we have been underbuilding homes for decades. That's why prices don't typically collapse. Demand still exceeds supply in most markets. Inventory should continue to increase, but gradually. This isn't a flood of homes hitting the market all at once. Experts expect a two-speed market in 2026. Some areas will remain competitive and tight, mainly the Northeast and Midwest. Others will feel softer and more negotiable, the South and West. With higher inventory and modestly better affordability, more Americans are expected to buy homes this year. This is an important one. 2026 is expected to be a reset year, not a rebound year. That means realistic expectations and smarter decisions. Existing home sales are expected to increase by about 10% in 2026. That tells us more people are getting back into the market. New home sales are also expected to rise moderately. Builders are adjusting and buyers are responding to incentives. When you combine existing and new home sales, total transactions are expected to grow meaningfully this year. Zillow sums it up well. Buyers get more options and better affordability. Sellers get price stability and consistent demand. That's balance. As we move through 2026, this market rewards preparation, realism, and good guidance. If you're thinking about buying, selling, or just want clarity on your local market, I am here to help. Thanks for watching, and here's to making smart moves this year. Bye.